Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandanis. Markets look set for a cautious start today on Fed rate hike worries, rather the continued worries. US market ends lower after unexpected strong inflation data, drop in weekly jobless claims. Also, SGX Nifty futures, they indicate a negative opening for the broader index overall for India. And Asian shares too continue to trade lower as investors digest hawkish commentary from Federal Reserve. FIIs, that's a pretty picture there. Almost 5 consecutive sessions of buying coming in on that one. FIIs have bought in 1,570 crore odd equity, and DIIs too have been a buyer to an extent. Also, let us get going and discuss some stocks and strategies today with Pritesh Mehta, the Senior Vice President Research, Institutional Securities. Pritesh, good morning out there. I'm going to start off by asking you about the Nifty levels, right? We've seen some correction which crept in yesterday in the markets at the close after a positive start which came in. Of course, it was also partially on account of the weekly expiry that we saw. But do you think this week Nifty would be able to scale past or end the week well above that 18,150 odd levels?
In fact, good morning, Nikki. In fact, we were of the opinion that 18,100, 18,150 is going to be a tough hurdle for index, and that came into play yesterday. Index, yes, reverted off that high. The open of 2023 is around 18,131. And index marked a peak yesterday and came off. There's also resistance of downward sloping trend line on pointer figure chart. Also, the Nifty is trading below 10 column average. So there are several resistors at play right now. So in this kind of scenario, I don't expect market to move ahead. In fact, we also need to look into the breadth of the market. So when we went a couple of days back, in fact, yesterday itself, Nifty went past the budget days high. So I want to know how many stocks are participating. So, there are less than 50% of stocks which are trading below the respective budget is high. So the breadth is weakening. In this kind of setup, we don't expect market to go higher. In fact, at the higher level, we should be searching for shorting opportunities.
All right, is it like a buy on dips kind of strategy that you're suggesting right now? If that also is the answer, I would also want to chat about the bank Nifty levels that we're looking at.
See, the current predicament that we are in right now is largely because of Bank Nifty. I should say underperforms Bank Nifty, whether it's private banks, whether it's PSU banks, both are underperforming Nifty. And when you look within the PSU bank basket and apply a top-down approach, there are several stocks which are breaking down, whether it's Bob, Canara Bank, they are making big bearish patterns. In fact, when we analyze Bank of Baroda, it has given a total breakdown. So in this kind of scenario, we can see ongoing weakness in this particular stock. In fact, we can see stock going towards 145, 150 levels also in next few weeks. So I think this space is going to struggle, and we have to be extremely stock specific in this market.
Okay, I'm going to quickly chat with you. When you say stock specific, what are your calls for the day? But before that, Pritesh, I would like to chat about FMCG overall as a basket and the index, because Nestle ended with gains of more than 1% after reporting numbers yesterday. I would want to understand from you if there is a further upside coming in on the HUL and Nestle before you give me a level on Reliance per se.
In fact, when we look at FFG Index, the ratio of FMCG versus Nifty has been holding up pretty well. They trying to surpass its previous peak. And in this kind of market where it is struggling for momentum, this particular space tends to play out very well. So rather than focusing on HUL, which is shaping up, which is providing a bearish pattern, I would rather shift my attention towards counters which are looking extremely strong. So IT is one of them. Apart from that, Godrej CP is looking very interesting. So there are bullish patterns developing in this space. So I feel that this particular index will do well, but we have to be extremely stock specific even in this index. So my pick would be ITC and Godrej Consumer Products.
All right, Pritesh, I'm going to get back to you on this one and chat about it a little more in detail. But before that, stay on with us. We'll quickly address the stocks and news for our viewers in order to understand what could be the newsmakers for the day. Well, there is an initiation report coming in on KFIN Tech. Now, this report is coming by JP Morgan and it has initiated the coverage with a neutral rating with a target price of nearly 320 per share. It says that there is a concentrated industry structure overall with long tail annuity revenue which is set up. It also speaks about the verticals, right? New verticals which have a scope of faster growth. Of course, it's also, spoken well about the EBITDA guidance. 40 to 45% of EBITDA margin guidance is way higher than what the company has clocked in historically. But if you see in terms of the earning growth, KFIN Tech is expected to have a mid-teens earning compounder over FY23 to 25. That's the estimate that JP Morgan has given. And also it's done a sensitivity analysis where it speaks about 1% rise in the PAT driving a 7% upside coming in on the target price. That's one counter that we definitely need to keep an eye out on. And there are CEOs have been resigning, Zee Learn and Angel One. These are the two counters that we'll be looking at. In Zee Learn, you have Ritesh Handa, which has resigned with immediate effect as a CEO, and also the reasons have been cited as personal. Of course, Angel One, where Narayan Gangadhar, that's one another counter where the CEO has resigned. What remains interesting in today's trade, I guess, would be Pricol, right? Because yesterday CNBC reported there was a report which suggested, or rather they broke the story which suggested, Minda Corp would be acquiring nearly 15.7% stake in the company. Today, Pricol came in with a clarification and said that, the promoters have no intent of undertaking secondary sale of their stake, and they don't intend to raise any kind of equity capital in any form, and that the fundamentals of the company remain pretty healthy. Also, they suggested that right now the company is a net debt-free company, and the fundamentals have shaped up quite well. So this could well be seen as overall first step of actually glorifying the fact that the fundamentals are in place, and this could be taken as a call for institutional investors to come and look at the company, if at all there are any stake sale plans altogether. But telecom stocks also, they might be in news today. Not sure about the impact, but sure the monthly subscribers, the December data has come in where we're seeing Vodafone has lost some amount of subscribers there, 2.47 million subscribers. And Bharti Airtel and Reliance Jio, on the other hand, have added 1.53 million and 1.7 million. All right, Pritesh, I'm going to quickly toss this back to you and ask you about Reliance Industries. What levels do you make out of this one, and what calls do look attractive to you?
So basically, I have been sounding bearish on the markets, but this particular space, Reliance Industries, stands out for me. It has been through a lot. It has corrected, it has underperformed index, but I believe that there is now very less downside here. In fact, stock has already made a good comeback in last few sessions, and I'm expecting the stock to continue its journey. So this space could provide some respite to the market, and in fact, Reliance Industries could do well from here on also. Yes, we have seen a strong upside in last few days, but I think there could be follow-up buying coming in. I'm looking at the levels of 2700 as a medium-term upside on this particular counter.
All right, Pritesh, we're waiting on the sidelines for market to open clearly. Well, Nifty has started on a little downside there, right? 0.4% loss. Clearly, the global handover also was suggested of a cautious or a negative start coming in. Sensex too, we're seeing cuts coming in, 0.5% gone there. Mid-cap index, the broader indices are also down and out, as you can see in the chart. And if you look at the banking index overall, that has also lost in 0.5% there. The small cap index too seems to be down and out in the trade. So clearly we aren't looking at we are looking at a negative start coming in for the markets. And Zee Learn, that's again the CEOs, like I just indicated in stocks and news, the CEOs has resigned there. Angel One also, we're seeing down and out. Overall, you're seeing some amount of pessimism now creeping into the markets, especially when we are ending the week. So it's a weak start. Pricol on the other hand, like I indicated, it's going to be an interesting one. 5% up there. Fundamentals, the promoters say the fundamental remains strong. Vodafone Idea, 1.33%. The telecom stocks overall, they aren't doing too well either. Bharti Airtel, we're seeing some amount of gains coming in on that one because of the additions that we've seen back in December. Also, Reliance, of course, no support coming in from the index heavyweight stock. Reliance, 0.5% gone there too. But Pritesh, I'm going to quickly ask you now that the markets have opened and we've seen some amount of pessimism, probably, if I could use that word, creeping into the markets. 18,000 level has, we are no more near that level anymore. Do you think market would be able to scale past that level?
I find it difficult because there are multiple picks as I mentioned earlier, and when your heavyweights, your laggards, your heavyweight sectors are not participating, so it will be difficult market to sustain on the upside, even if we have a pullback move later. But my view, the rise that should be short position. Nifty coming low markets, Nifty is an emerging markets. Also, if you look at the other sells up rather than looking at Nifty. And when breadth is not participating, it becomes very difficult to be to go all the way and buy index.
All right, Pritesh, also, what was important in today's trade was to see the fact whether IT index is overall participating into this or no, because we saw some support coming in on that one. Well, we're seeing cuts there too. Nifty IT also is down and out with more than 0.5% gone there, 0.75% rather gone on Nifty IT Index. But Pritesh, we've seen some amount of gains coming in on Nifty IT Index over the last 2 to 3 odd session. But now that the index is also down and out in red, what do you make out of it? And do you still find any counters attractive at any attractive levels within the space overall?
See, IT index was a big underperformer last year, and now it is trying to make a comeback. In fact, we have seen a rally of 3,400 points in this particular index. But at this point, to chase these stocks won't be a right approach. Yes, if you look at the ratio of IT versus Nifty, it has given a rounding bottom breakout. So there is going to be strength coming in, but we have to wait for a while before getting into this space. There are stocks which are showing strength, something like HCL Tech, TCS, Emphasis. They are looking very attractive, but at these levels, I would wait for a while. I would not jump in when market was supporting right now.
Sure, clearly we're seeing some cuts coming in even on TCS and the other blue chip IT stocks overall. But Pritesh, we'll leave it at that. Thank you so much for taking out the time and speaking to us. All right, let's bring in another guest in our show. We've spoken enough and more about the levels, but let's talk about FMCG basket review, right? Because Nestle reported numbers, decent set of numbers were reported in previous session. The stock ended up with 1% odd gains. But let's bring in our guest Sanjay Manyal, who's the AVP Equity Research Analyst at ICICI Securities. Sanjay, good morning out there. I'm going to start off by asking you about your overall assessment on the basket overall, how the numbers have fared, anything that stands out for you in Q3?
So yeah, there have been multiple results which have been better. Though FMCG companies have faced a pretty lackluster volume even in this quarter, given the fact that high inflation and the commodity prices were taking the toll on the demand in the rural regions. As far as Nestle is concerned, we have seen yesterday, the company has posted 14% kind of growth, and largely it is coming from the pricing growth. Volumes have been flat in the quarter, but volumes have grown, by approximately 5% on a full year basis. So I think for Nestle specifically, again, the rural region is something which has seen a dent, specifically in a smaller pack noodles, where the company has taken a very steep price increase, and that steep price increase has resulted in a volume sort of decline in that particular segment. So yeah, so I think the price hikes which FMCG companies have taken have still is sort of percolating to the revenue growth, and that's probably has been sort of impacting the volumes to a certain extent.
Clearly, I mean, we're seeing the stock currently, down and out with losses of more than 3% odd. So some amount of weakness clearly has crept in on account of that. But, I'm also going to ask you about the weak demand environment overall and the inflation, which has probably made this quarter a bit more challenging. You think the outlook is any better for these companies?
If we see the entire commodity basket, the palm oil has has cooled off substantially. Similarly, crude-based packaging material has come down in last 3 months. But some of the agri commodities like wheat, milk, have still remain in elevated levels, and that has certainly negatively impacted some of the companies like Nestle, because Nestle is almost 20-25% kind of a raw material basket is milk, and approximately 11% basket is wheat. So that's a pretty heavy on an agri commodity side. We probably need to sort of wait for another maybe 3 to 4 months at least for the milk prices to cool off. Wheat prices, what we believe, have started coming off already after the government has sort of released the excess stocks with them with the FCI, and probably the harvesting in the April hopefully would be much better than the last year, and that probably will lead to the softening of price of wheat. But as I told you, milk probably we have to wait for some bit more, and as far as volume growth is concerned, I think this particular quarter, as I mentioned earlier, there are certain specific products or SKUs which has seen a volume decline for Nestle, and that probably may not continue going forward.
All right, Sanjay, clearly, if you're not seeing any amount of re-rating coming in on these counters, do you still think there is a chance of an EPS upgrade coming in on that one?
No, I don't think as of now we are not upgrading. In fact, we only have cut our EPS by 2%. And as far as re-rating is concerned, these FMCG companies are trading at a pretty premium valuation. I don't think there is a good scope for any further re-rating. On the contrary, if volume growth remains lackluster, and if the commodity prices remain at an elevated level for an extended period of time, we might see in fact de-rating for some of the companies specifically. So I think it is very important for the FMCG companies to sort of see cooling off or the softening of the commodity prices and recouping of the volumes. That probably would help them sort of grow over the years. Many of these companies have a large opportunity size in terms of foods business, but there are some saturated categories like hair oils and oral care which are not growing in any manner.
Sure. Sanjay, do you see any kind of commodity inflation coming down for any of these counters, maybe in the Q4? Do you think right now maybe we'll have to wait out perhaps 2-3 quarters more, like you suggested, to kind of inflationary pressures to recede and the margins to expand? But do you think anything could happen on any of these counters just for the next quarter? Any one particular company that could probably see the inflation pressures probably receding given the underlying commodity?
So I think one of the companies which have done well is ITC, and that's largely because of the cigarette volume growth coming back after 2 years of sort of COVID impacted category. But that was so I think that one category is growing very fast. So there has been a reasonable stability in the taxation, even in the current budget. The taxation has not increased to that extent. It was hardly, it might just require a 2% kind of a price increase, which is not that high. So I think the cigarette is one category which will continue to see the high volume growth, even in coming years. And ITC also sort of has been gaining margins in their FMCG kind of business. They have reached a 10% kind of margin, which they have been guiding that 100 to 150 basis point margin expansion is possible every year over the next few years. So there is something which we believe we might outperform the entire sector.
All right, and how about the valuations in this space? How do they continue to look at HUL and Nestle, like we've suggested, like we've had the discussion, continue to be at a premium as compared to the rest of their counterparts, and reasonably so because of their underlying fundamentals. Do you see that gap narrowing down anytime soon with other counterparts?
I think in FMCG companies, though HUL and Nestle, these are the much bigger companies. They might still sort of command a premium valuation over the other companies. But I think there's a huge difference in the quality of the earnings for these companies and the other ones. Nestle specifically has a only business in the foods part of the business where the opportunity is much larger. HUL also pretty much in the PPC category where the opportunity size is much larger, and simultaneously they are somehow gaining market share, as well as they're witnessing growth even in the saturated categories like detergent by the premiumization strategy. So I think that these two companies probably will continue to command the premium multiples, whereas all the other companies where the hair oils or the hair oils or the oral care is a very large proportion, those companies might continue to face a challenging time on the growth perspective.
All right, Sanjay, one last question before I let you go. I'm just going to ask you at this point of time, do you think any other company that looks better in terms of the outlook as compared to the other counterparts fundamentally in terms of the margin profile, in terms of the top line growth, and also in terms of valuation per se overall in the FMCG space?
So we, as I told you, we like the foods part of the FMCG because the opportunity size is much larger over there. Though there are currently headwinds of the commodity pressure, but I think eventually the commodity prices will cool off. Maybe it might take 1 quarter, 2 quarter, but eventually the commodity prices will cool off. And in this space, Tata Consumer, in this space, ITC would do probably much better compared to the other companies.
All right, Sanjay, we'll leave it at that. Thank you so much for taking out the time and speaking to Moneycontrol as always. Well, with this, it's a wrap. Thank you so much for watching, and please do post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For the rest of the updates, stay tuned to moneycontrol.com and Moneycontrol app.